would like to invite our team of expert panelists on the stage. We have Mr. Gaurav Mathur, who is the founder and CEO of Digital Gold India Private Limited. Safe Gold, the company's digital gold brand, is India's leading digital gold platform, which is integrated with more than 100 banks, fintech apps, jewelers, and payment platforms. We have Mr. Keyur Shah, who is the CEO of the precious metals business at Muthoot Group. Mr. Shah of 27 years of experience in strategic business planning and implementation. Mr. Vikram Dhawan from Nippon India Mutual Fund, who is head commodities and fund manager at Nippon. He will be joining the discussion online. I think he's already there. So he is managing Nippon India Multi-Asset Fund, Nippon India Silver ETF, among others. We have Mr. Johnson Lewis, who is currently a partner in FinMet, which works on customized solutions in the metal space. Mr. Lewis has been associated with the metals industry since 1997, and he is heading the precious metals division with an MNC bank. And we have Mr. Amul Kumar Saha, who is Chief Digital Officer at MMTC PAM. He heads the strategic verticals of digital gold and silver, e-commerce, marketing and consumer experience, with over 12 years of experience in the online and e-commerce industry. Over to you. Thank you.
After a loaded previous session, I think we make it lighter now, and we move to the technology part of the business now. I request Sudhish to take lead in moderating this session, please.
To set the context, last 7 years. Last 7 years has seen technology driving the gold markets and giving a lot more penetration to, across the consumer segments. And digital gold has digital gold service would be the latest sentence, I would say. And before that, the gold loan, where KU has been operating, and the scrap collection centers, which were, if I'm not wrong, we were the first to be introducing a lot more on the digitizing the scrap collection marketplace. Right? Yeah, yeah. So, and we have Johnson. With Johnson, we would be that's FinMet 2-year-old, and they are focusing quite a lot on the gold metal loan, building the gold metal loan business across the markets. And Vikram Dhawan, Vikram's missing you here. So Vikram would be discussing a lot on the gold ETFs. Well, it's do I need to say it's stagnant? It's gone to a stagnant space, or is still there a room for it to grow? And what are the challenges that's ahead for the greater market penetration is where we'll be discussing in detail with Vikram on that. So let's start with Keyur. Keyur, you've been quite successful in the operation of gold loan and scrap collection centers. So let's get to the basics of how you've been using the technology to leverage on the.
See, Muthoot as a group obviously is known for giving loans against gold, and it has, I think, probably been, along with the other gold loan NBFCs, which are regulated by RBI, I think we've been pretty successful in showing an example how gold can be monetized in an organized way. I think that is something which has impacted the mass market. And this is where our endeavor has been. Till you don't do something and you make some visible changes for the mass market, most of the innovations fail because they just remain at the top 5% and they fizzle out over time. So gold loan is one example, traditional thing of monetization. Now how that also in terms of digitization technology is, we are now trying to give gold loan from home. So we have an app which we've created where a customer query comes through immediately. Now there is a physical aspect, which is something which we yet need to figure out how to solve it, because in terms of gold loan, there has to be some gold which is to be pledged, so that needs to be assessed. Now that assessment is physical currently. But this whole new thing of digital gold, saving in digital gold, where, we have Gaurav here, there are other stakeholders, that I think is the future of gold loan industry also. And that is something where, again, from a regulation point of view, one, the industry needs to be regulated, but RBI needs to recognize the existence of digital gold and then needs to allow NBFCs or banks to give loan against digital gold. Then just think about how the entire industry changes. People will stop saving physically. Why? They believe in gold, but they will, suppose they have digital gold units at the back end, instantly, seamlessly, with the push of a button on the app, they can get a gold loan into the bank account. Because the physical gold is behind, it obviously has to be some standard, and that would be acceptable to any bank. The whole risk of assessment goes away. The risk of theft, strong rooms, all of that changes. So there are challenges, but we are moving towards it in terms of, I think one of the things in earlier panel was mentioned, stop looking at the past, let's look at the future. The future of gold saving should be digital to help facilitate, faster monetization of gold, which Indians buy so much every year.
So that being said, what is the level of adaptation, or what is the customers' acceptance of? They may be having about 60% of the gold that they are holding is not on a regular use. How comfortable are they going and keeping it one third-party storage space from where at any point in time they can just take a loan out of it? That's been a concept that's launched.
Yeah, see, I tell you, and again, it depends on geographies. One of the presentations.
And what's been the consumers' acceptance on that?
So it is very regional also. It depends also culturally which part of India. So there was a presentation about the Malabar region. Okay, Kerala is where all the large gold loan companies started from. Our group, other Muthoot, Manapuram, and all that. Their gold is usually never kept in locker. They believe in using whatever gold they have, whether they need it. See, it's a misconception. Culturally, North India, it is more about, in earlier days, you pledge your gold only in distress. And it is a shameful thing to do. And it would be a hidden thing to do. They wouldn't tell anybody. But in South India, especially in Kerala, they're very proud. You'll find actually college kids also who are adults. If they have a gold chain and they are out of pocket money, they'll come and pledge that, take money, and then take back the chain later. And they tell that openly to their family members that, yeah, I needed this and I didn't want to ask you, Dad, so I pledged the chain I've given. So it's cultural, very different in different parts of India. But there is gold there. Now, past gold, if you want to digitize it, difficult. This the whole GST issue, losing out 3%.
Okay.
But I think that, let's see how that gets solved. Maybe obviously that's a huge regulatory step which the government will have to take to forego or allow that GST credit to companies like us or organizations us who are willing to digitize it, right? But let's start for the future from now. That at least the future savings is in digital. All these problems get solved.
So is there a way that we can integrate the EGR process into the digital gold buying and all that?
See, now there there are two things. There are 3 points on EGR. Currently, we who have offered digital gold as a product offering, I have started digital gold, which I focus largely on the low-income consumers, the core Muthoot group customers who are very, very low-income, poorest to poor, like that. There we are doing it, but there are, I think, 3 nuances to digitize or them accepting digital gold. One, the endeavor should be to simulate the existing process of buying your behavior as close as possible, then they'll adapt very easily. Okay. And for that, for them, physical redemption in the end is important. They are not of the trader mentality buy-sell. Buy-sell works, right? And that's where I think that works with people who are already there on the stock exchanges. They're investing in that. Now, EGR, which you mentioned, obviously there's this capital gain tax thing was resolved during the budget, but the GST issue is still open-ended. Hopefully it'll get resolved. But the problem, again, is aligning digital gold to EGR. I think there are three issues. One of them is about GST will get resolved. Second is about the ticket size. Will EGRs come in 0.01 grams or 0.01 grams? Then you'll include the mass market. Otherwise, you'll again find the top cream, the rich people who have the disposable income to put in 5,000, 10,000 rupees.
I have few thoughts on that.
Yeah,
in
but
fact,
the
I'll
third,
come back to that again.
But the third most important thing I think is not going to get solved right away is how many people in India still have demat accounts or PAN card. We are, at least with digital gold, I think the way in the current form it is, we are offering a very democratic product to the end consumer, allowing them to buy fractions of gold starting with rupee 1 without the need for PAN card demat account, realizing the reality.
Yep.
Slowly that gap will, hopefully everybody will get a PAN card, but that'll take decades. So my view is not to align ourselves with easier right away, will kill the digital gold product, the vision of this product. But yeah, get some regulatory mechanism which all of us who are organized sector players are willing to adhere to.
So I'll come back to this again, but before that, let me go to Johnny now. So what do you think is the major driver for the use of technology in the gold trade now?
Thanks, Harish. One of the important things that I've seen over the years, like if you look at India per se, India basically has gold imports of close to about 700 odd tons every year, out of which 600 tons is for jewelry demand, and then we have close to about 150 to 175 tons that is primarily for investment. And if you look at that, most of the investment demand has been coming through in the rural areas, and basically it's not through an electronic sort of thing. It is basically what we have seen is the gold ETFs have seen a reasonable amount of gold demand for investment. So we have seen close to about 40 tons. We have a good amount of business from the sovereign gold bonds where technology has been used to drive some sort of investment demand in gold. So in terms, there is definitely a great opportunity in terms of using this platform, because we have close to about 175 tons of investment demand that is there, which is right now not not going through technology. Only a small portion of it is going through technology. So there is a potential for moving that into technology, and I think we'll have to reach out to the rural areas which Keyur was mentioning, that where they are going out there and giving it in small lots and sort of things, where if we can reach out to them and even educate them about this sort of thing, because there's obviously still a lot of gap between people going out there and buying gold, because generally most of the investment demand comes where people buy physical, hold it, and it lies there in their wallets. It's not through any demat accounts. As I said, ETFs is there. We have the gold sovereign bonds that have picked up but those are not, like the gold sovereign bonds is not something that an institutional can easily create, right? Because it's managed by the government. Gold ETFs has done to some extent I remember starting it somewhere in 2012, and then it's overgrown. But to the extent of what it should grow, like if you see globally, there is close to about 3,000 tons of all ETFs put together, from what I've read from the World Gold Councils. So that means there's so much of gold ETF potential for investment. But in India, there is a lot to be done in terms of technology. But I can see there is a great push, because when I meet a lot of jewelers and sort of market players, they are all moving towards technology. One is because it is everybody knows the benefit of technology, because it is efficient, it creates speed and sort of security. So definitely when we talk to clients and jewelry clients, jewelers and all, they are slowly moving into using technology wherever possible in terms of attracting their clients.
You've been working quite a lot on the gold monetization space as well, trying to promote that. And how technology is playing
in gold?
Yeah, in gold monetization scheme.
So in gold monetization, obviously we were, as a bank, we were trying to,
post that in the FinMed side.
In the gold monetization, we are trying to see whether we can work with banks in terms of creating a risk management module where they can, where we can access the gold from, Temple Trust, or we can access the gold from gold ETFs. And because there's lots of gold ETFs who have, gold ETFs can give 20% of their holdings as gold deposits to banks, right? So there's an opportunity, but I'm not too sure that all gold ETFs have used that particular 20%. There is still a gap from what I understand.
Then
So
I'll just get to Vikram then.
yeah.
Vikram, so what's been the growth story for ETF if you have to compare in last 4 to 5 years? There's been an initial rise and it's again been stagnant, or and what is it that can lead more investors to park their gold in the GMS and so?
Sure. Well, first of all, thank you very much for inviting me for this panel. And I didn't come physically because I was stacking up my carbon credits. So, so anyway, that's just kidding. So I think what Johnny said is something I'll take a cue from it. What I'd like to add is that if you look at the mutual fund penetration in the developed countries, it's anywhere between 40 to 70%, whereas in India it is less than 5% or 10%. So that is a kind of journey that we have just started. And Johnny is absolutely right in saying that there are 3,000 tons of physical gold-backed funds. This excludes the swaps and the derivative dates. That is 1x or 2x or 3x of it. We don't know the exact number. So we have actually just started a journey as far as mutual fund and gold is concerned. The reason why gold ETFs are the preferred route globally, and I think that is also the case in India. I mean, despite having competition from various avenues, gold ETF tends to be the most favored avenue for investment, is because of the the fidelity, the regulations, and everything. And also that any business or any subset of a business which is sort of patronized by large regulated institutions, that tends to get more traction. I'm not saying that digital gold is something is something different, or maybe gold bonds are different. Obviously, I mean, me and Gaurav connect on so many things on digital also. And that's another story, this point which I'd like to touch in a couple of minutes. But fact of the matter is that unless we see any sort of industry or the subset of the industry being patronized by institutions, it is the growth, the explosive growth is very difficult. And from what can if you see the various studies which World Gold Council has done, whether it is India or China, there is a direct linkage between the value of gold purchased by the economy and the rate of economic growth. So if we are expecting the GDP or the per capita income to double in the coming years, then I'm not saying the gold consumption will double, but it will definitely move up beyond 5 or 10%. So this is a market which is big, and it is getting bigger and bigger, and it will need a lot of institutional participation. And one very important thing is today we are in a way existing in silos, whether it is digital gold or gold ETFs or gold bonds or the physical trade. We tend to be existing in silos, and what it does is that sort of it is depriving the market of the synergies that all these types of gold can bring, which can increase the depth, the liquidity, which will eventually benefit the investors, the common man, the average Indian, who sort of doesn't need to be sold a gold story. And there's one more thing that I think we need to acknowledge, that while gold is being now looked at one of the factors which is sort of deteriorating the current account deficit, but we have to also remember that one of the reasons why India and Indians weather any global economic storm much relatively better than their peers across the world is because of the gold holding. It is not the only reason, but it is one of the reasons that we have. So I think
Vikram,
taking a clue from this, actually, I want to bring in Gaurav and Amul into the discussion. Is there a perception that when we talk about the growth of investment products, is there a perception? I know you guys have representative to various regulators and policymakers. is there a perception that the use of technology or creating these kind of products will create additional gold demand? So, which in my opinion is not the case, it is just replacing the demand. So what's your take?
Is it addressed to me or Gaurav?
Yeah, so I think the short answer is yes. There is a clear perception on the regulators that we have interacted with, that creating more channels will increase demand for gold, which in their mind is very black and white. It's not a good thing. If the regulators could see lower demand for gold, there is an unambiguous communication to us that they would be happier with lower demand than higher demand. So I think that that's the message we've got very plainly.
When you add your bit on that, I also want what is the resolution?
That is what it's easier to talk about.
So I'll rather approach your question in a way that, look, the demand for gold is inherent in the Indian society. So it's not like, as you said, that online is creating an additional demand on top of an online. But as Keyur said, it's about creating the democratization of gold. If the average ticket size of a gold product, especially for say a wedding kind of an event, was upwards of lakhs of rupees, now from an early age itself, with the right amount of education to the end audience, people would be in a position to start accumulating gold. And it's again goes without saying that if I start accumulating 1 gram today, the price of the same 1 gram is going to be a lot higher later on in my life. So I think that's the solve that technology and the widespread presence of data across every handset is able to provide. And technology per se, in my opinion, is not just digital gold or silver that we are talking about today, but also from a mass consumer perspective about having access to minted products through e-commerce, or for that matter, being able to create store locators on our own website so that you could just come figure out where the right place is, being able to disseminate the right information to the customers. Then it's within the purview of the customer to figure out where they can unlock the best value for themselves. I'll leave it at that.
I was recently looking at a company where they are looking at farmers adopt the digital gold, and they talk. It's in millions of farmers, and they're using an app on which it's a tokenized form. In the tokenized form, they're going to all the transactions are going to be using gold tokens for their fertilizer purchase or for any of the sale of the produce or so. How far away we are in India on that front?
Okay, so see, from a technological and an operational point of view, I think there are a bunch of players who can flick the switch and it can happen tomorrow. I mean, like our company, you can go and walk in, you can walk into 2,000 jewelry stores and pay for jewelry. Technologically, whether you pay for fertilizer, or jewelry, there's zero difference, right? And there are already 2,000 outlets, online, offline, accepting this. So it exists. The main issue is, and what you're alluding to, broader question is, can you create a digital gold-backed currency which can do a whole range of things? That technology exists. In fact, many people have just not turned on the features that are there. It's just a 100% regulatory issue. I think at least for all new forms of new products that are driven by technology, the challenge is, I'd say, 99% regulatory, 1% everything else. It is incumbent on us to demonstrate to the regulators how this will benefit the country. It's not, just saying that we need better regulation is not going to make any difference. So at least what we have done, and I know others also working on it and have launched it, is the whole leasing program. And I think people just underestimate the impact that gold metal leasing can have. One thing we should say is fairly unambiguously that the gold monetization scheme was launched in 2015. Just looking at the data, it's been a failure. I mean, I don't want to mince words about it and saying we can improve it. It just flopped, and we can accept that. At least I'll go out on a limb and say that. And for all the talk, I've been attending conferences for 5 years, there's nothing material that's really happened to change it. But if you look at the scale of the issue, we've got, according to our analysis, there's roughly $600 billion worth of gold coins, ignore jewelry, just gold coins owned by Indian households. $600 billion, to put it in perspective, is more than our money supply. So M1, which is narrow money supply, which is all your printed currency, plus all demand deposits, it's all current account, savings accounts, is about $560 billion. Now, if you can just mobilize that, which is idle gold, some coins sitting in someone's locker, or if you can mobilize that and bring it into the economy, you'll have 3 impacts. One is you can get gold imports down to zero for the next decade or two. If you look at the GDP formula, it's C plus I plus G plus X minus M. So imports are reduced from your GDP. If you remove 30, $40 billion of gold imports, that's a straight 0.5% addition to your GDP. Second, you invest $600 billion in the economy. That's 100, if you take our incremental capital output ratio, you'll add 100 to $150 billion of GDP. So you can add another 0.5 percentage point to your GDP growth. And you have consumers who are sitting on $600 billion of an idle asset, give them a 2, 3, 4% yield, you will add another 30, $40 billion a year to consumer income. So I think if there is one policy, and it's not one thing that will solve it, but if as a country, as an industry, we can figure out how to mobilize that $600 billion of idle gold that we've got, and technology can play a vital role in this, you can actually transform GDP. It's like the one thing that can change it, and it shocks me to an extent. I mean, we all go meet the regulators. They keep on harping on about this gold monetization scheme, which has just failed completely, and they keep on thinking that it's going to work, and we'll do this, and we'll do that, and stuff like that. But now, I think the responsibility is as much on various industry players to go and find a solution. Complaining about it doesn't kind of solve it, but it's a huge opportunity. The fact is, you can build massive businesses, you can build another 40 institutions the size of HDFC Bank and still not tackle this problem. And I think there are a bunch of people working on it, which is essentially making it easy for people to lease gold that they have and give it to people who want to borrow that gold.
No, so the banks have not done it. Maybe there's no business case for them. But do you see a business case? What has been your experience on that? Have you ever tried mobilizing scrap and bringing that into the system by using the technology?
We've tried, but as I said, scrap means it's about the past holding which the customers have, okay, and it's physical form. Now, for them to lose out 3% when the non-organized sector players, there are a lot of players who are willing to give them cash with 3% GST. They will not. We've tried pilots on this in Bangalore that, okay, we take the scrap and digitize and give them digital gold, and we tell them, we demonstrate to them that now the power's in your hand, you decide what you want to do. So they like the concept, but the moment they realize 3%, they're losing when somebody next door is offering them the whole thing, then they will not.
No, sorry. I'd say if you digitize it and give them a yield on it, just digitizing and keeping idle is no value to them, right?
Agree.
But digitize it and say, I'll give you 3%, 4%, that's when you'll get a lot of them doing it.
Yeah, but the first step is about digitizing it. That's where they see that they are losing. Then giving a yield, they think there are many other places where getting yield. They do get
On
that.
gold, that's not commonly available.
Not commonly, but I'm just saying, so the first challenge is the past. So my view is, and see, Gaurav, as you rightly mentioned, regulators also, I think, stuck in the past about gold monetization. There's so much gold lying, bring it out. I think we should start on the present and build it to the future. That will slowly give confidence about making some drastic changes required for the past.
So Gaurav introduced a new concept of peer-to-peer lending into the leasing. So has it helped? And actually, is there some gap which you're trying to fill? Like, the banks are already doing it. And so do you see some gap? What are the markets which you are trying to cater? Is it more focused towards the people who are, buying gold through your platform, or is it more focused towards serving the, the borrowers? So what exactly is the...
See, so you have two sets of stakeholders. You have the people who want to borrow the gold, and you have the people who want to lend it. So if you look at the people who've got gold and want to earn a yield on it, whether they have it in their home or they have it in a digital account, today there is no real option. You can theoretically go and deposit it with the bank, but it gives you 0.5% a year and 0.6% for 2 years, and it's a horrendously difficult process to actually go through operationally. If you got 5 grams of gold, you're not going to make 4 trips to a bank branch to monetize it. So you just make that process simple and give them a 3% yield, whatever higher yield you can give them, as opposed to what the banks give them. Now, I think ironically, policy is such that banks can import. So as a jeweler, you can import gold, get a metal lease because it's imported. Like external commercial borrowing is severely restricted. It's not that any company can go and can borrow in US dollars. Yet gold is somehow, we have this huge domestic supply of gold, but we favor banks borrowing it from overseas and lending it to anyone they want. So that's why the yields for savers in gold are very low. So why Indian savers in gold are penalized at the expense of banks going and borrowing abroad is one policy issue one needs to think about. But leaving that aside, the banks only lend to, let's say, the top 1,000, 2,000 jewelers. They have arguably, reports say 300,000, but maybe bankable are 50, 60,000 jewelers. So there's a market of, let's say, 45, 48,000 jewelers and manufacturers who are underserved. It's similar to, I'd say, you have banks and you have NBFCs. And NBFCs will lend to the, I'd say, next level who the banks will typically not service. So similarly on the metal leasing side, on the lending side, banks get the large players get serviced by the banks. The next level is what people like us can service. But on the supply side, they have no option today. I mean, the gold monetization scheme exists in theory, but hardly anyone really uses that.
So what I
you have some
understand
point
from this
there?
discussion is that to change the perception of the regulators or the policymakers also, it makes sense to push these kind of products where you are showing like how you can actually bring in more gold into financialization and can use it better. And it is, I think with that purpose, like even the GMS objective will be served. So I think with that, I think we should.
So as a
So
just
as a
one
point,
thing, as a simple
the
baby
police-
step
Harish,
on
I have a slightly different take on this. Can I please speak for a couple of minutes?
Yeah, please.
I have a slightly different take on that, and I'll give you a live example. One of the reasons why, I mean, the mutual funds are also permitted gold GMS, gold monetization scheme, but it again is a very small fraction of the entire thing because most of the gold is in physical form, and there's an awful amount of haircut which happens. Now, let me give you a very direct example. Last year in USA, the total redemption of gold ETFs, I mean, correct me if I'm wrong, we have Sudesh, we have you and World Gold Council people also sitting, but anecdotal evidence suggests the total outflows in North America alone in the gold ETF was to the tune of 500 to 600 tons. They could do it because their holdings are very large. In India, if we have a larger holding, that will always be, when that gold will come out from ETF, either the gold prices have hit the sky, or if there is some global economic or domestic distress, and both the times the CAD comes under pressure, and both the times you need ready supply of gold without any haircut, which is of global standards. So I think, in case of India also, if we had, let's say, 1,000, 2,000 tons of gold in ETF, which is a very small amount considering what the holding is, it could have very well come out. It could have, saved us a lot of problem in terms of CAD and all those things. So I think, yes, I completely agree what Gaurav is saying about the peer-to-peer lending and GMS. Some derivative of GMS should be permitted. But I think you have already an existing, the regulators have already permitted you an existing product which is liquid enough where the money can flow, gold can flow in and out with the click of the button.
But there's only 10% of that
let
which
us
you can
first-
actually.
Yeah, yes.
Som, you had some.
Sorry, thanks, Vikram. That was I just wanted before two things to. One is a point and the other is a question to them. The first point is, of course, we are all looking at gold from the consumers, household consumers. But often we hear that the trade in India, in order to sell its 600 tons of jewelry, the trade in India is holding on to various estimates, 600 to 900 tons. Now, I'm a little intrigued by that figure because to sell 500 tons, you hold 900 tons of stock, and if indeed you are, and even if you are holding only 400 tons, truly, technology can be used to reduce inventory and actually recycle that. I mean, you just assume for a minute, you bring technology which is available with very FMCG, just in time, lots of stuff. You'd reduce the inventory with the trade by 150 tons. I think that is one big thing. And that can only happen with digital, which is quick manufacturing of jewelry, availability of standard, gold bars. I think which we can do it. We haven't studied that, maybe we should do it. That's the comment I have. The question I have is, just very quickly before I go, each one of you, we are all convinced digital is the way forward. What exactly do you want to happen in the next 1 year? I mean, if we can start with any of you, maybe Vikram is on this thing, what would you think must happen in the next 1 year?
Amul, you want to start?
Forget about whether somebody will say yes, no. Please, I'm giving you a green field. What do you want to happen in digital field space?
I think the
Sure.
simplest thing that could come in place is to at least have some kind of a policy or a framework in place. Policy or a framework in place, because I may not entirely agree with some of the things that the panel discussed right now. For instance, leasing. If you draw the same conclusion from what happens in households, Do I lease the gold left in my house with the nearest jeweler and probably get some yield out of it? I probably don't. So I'll be more than, I think it's incumbent upon us to be able to, as an industry, to form certain set of as-is policies within our industry so that the policymaker tomorrow knows that we are taking the right step forward, which is in the interest of the consumers. So I hope something on the policy lines basically happens in the next 1 year.
Right.
So that we all know what's,
about policy.
yeah.
So I'll give you three to four very tangible points.
Yes.
Which happen, then perhaps we can, compete with the developed country peers as far as gold ETF is concerned. First of all is taxation. Taxation has to be at least as good or as bad as equity as far as gold is concerned. I mean, here is something which is equal, the whole trade is equivalent to 2 to 3% of the country's GDP. It's about time that we took notice of it and did something about it.
I think that's a good point.
And secondly, the lending of, by banks and NBFC against gold ETFs. Now, whilst it is giving some incentives and encouragement also for that, because there will be less haircut, it is more liquid, it will encourage lot more financialization, and obviously, it will not lead to any tax avoidance or any sort of thing which allegedly may happen in the physical trade. So that is one thing which the RBI needs to consider. Last but not the least, today the ETF mutual fund ETF units are permitted to be transferred. So ideally, I can transfer my units to you for a consideration. But again, for this thing to happen, for instance, today the gold dealers are permitted by SEBI to swap or barter gold with cash with me, being my authorized participant. They should be allowed to do the same thing with the general public. This will ensure that there is very less friction between converting their gold ETF units into physical jewelry or physical gold. If these three things are done in some way or the other, some sort of a unified policy or a very articulated regulation comes out, I'm very sure that this will lead to India becoming one of the biggest destinations for gold ETFs and gold funds.
Thanks, Vikram.
I think we can
Gaurav.
take concluding remarks on this for this.
Yeah, so to add to this, basically, if the digitalization, what you were saying, that if we can get everything regulated.
So you are saying regulation.
Yeah, the regulated, like what, like how the gold ETFs, it's under SEBI sort of thing. So that will also help in terms of,
I'll add just two things. One is digital gold regulation, break it down further, how to store the consumer's gold safely. Get some government credited organization to audit the gold we keep. Second, allow, if we want digital gold players to align with EGR at the back end, allow us to do the way we are front ending without PAN DMAT. At the back end, as an organization, we should be allowed where unallocated fungibility should be there. These two things will help.
Absolutely.
grow the whole
See,
thing.
one thing is very clear, which we must make it clear to the policymakers. Digitalization of gold should not start with DMAT. If it is DMAT, there are, much more capable
exactly.
people who can do it.
Yeah.
DMAT is what, 10 crore people maximum?
Yeah.
You're targeting 60. You need to distinguish between DMAT people and the non-DMAT people, and let the non-DMAT people move away from cash into digital as a first phase. Then they will move into dematerialization. I think that's to be clear in the policy, but all of you are
That is
speaking.
there.
Gaurav, your final.
I think final would be just.
So
that-
I'll just
sorry.
add to that thing, one clarification that while you need a DMAT in gold ETF, but you don't need a DMAT for gold mutual funds or gold saving funds.
Yeah,
So,
yeah.
so typically the mutual funds are also part of the non-DMAT sort of the group that you have.
Yeah. Got it. Yeah. Gaurav.
I would maybe say the one thing that'll help is a sandbox, because there are a lot of new things that people want to do. If there are guardrails in place where people can test out new ideas with the regulators watching it, that will be a super useful thing.
So my only request is IGPC, while we have discussed again these in so many forums, is it possible for you to bring a very tight paper taking everybody's views, metal leasing, recycling, everything, and make it a tight paper? Is it possible? If you can't, We will try and
No,
do
no,
it.
no, we can work on that, and we actually have started a bit on that, and of course we can.
If every one of you can help out in that, in the next 1 month, let's bring it out fast. You know, these are known to us. That's my this thing. Sorry, I barged into the conversation because it was so interesting.
No, it's a
Thank you
good
very
point,
much.
Som. You know, we get together and
Make a laundry list.
absolutely.
Clearly.
No, I think you have to scale up the business. It's important that it has some umbrella of regulatory framework, and that's what we should work upon, and so that we do not have any shocks as well.
Yeah, and I think it will add to depth and liquidity in the market, and then we don't need to worry about whether we are price takers or we are price givers. I mean, we are India, we have our own price, let the world follow that. So, but today, it is so fragmented that, you know, each silo will have its own price, and they may not, the twain shall not meet, as they say. But if it all gets, you know, sort of considered as a one holistic picture, we don't need to worry about whether we are price takers or price givers. We have a price, that's our price.
Yeah,
That's right.
she's got a question.
So regulation, great. So, but let me go through the panel. Which regulator?
SEBI? SEBI, I
But
said.
SEBI.
SEBI and RBI both will have to
Both.
step in. Both. Why? Because
I think you need
SEBI
3
obviously
regulators
for
here.
the products which
No,
are on
so,
the,
this
but
is the
RBI.
point. This is where it starts.
Yeah,
right?
agree, agree.
So-
That is where the whole issue is. Because, so RBI basically, if it recognizes digital gold, we will get credible organization to audit the consumer's gold in our world. That is the primary thing which I think should be done, so consumers' gold is safe. Currently, self-regulated. We were talking about self-regulation in your panel. At least we are tightly 4, 5 of us are self-regulating, but you never know, there could be some player and suddenly the consumer's gold is gone. And it'll kill a beautiful product. It'll really kill the future of mass gold saving in India. That is what the first step. And second, we can align it to EGR.
So, no,
But there should be certain things as organization we should be allowed, but front ending without demat and all, let us do it.
No,
Because
so,
we
so
want
you
to carry the
want RBI
masses.
to recognize you as a savings product, or are you wanting RBI to regulate the leasing bit?
No, RBI should first recognize a product called digital gold. Digital gold is what I don't think they're recognizing. Because then what will happen, loan against digital gold will be allowed. Then you will see a mass movement. Muthuts, Manappurams and all will start telling their customers start saving digital gold, and we can give you don't need to come to a branch also. We'll give you over the app. The technology part will take care of it. The entire industry will change. ETFs also. See now, Vikram, you mentioned gold loan, NBFCs are not allowed to give loan against ETFs. Banks are allowed to give. These are the things which RBI needs to change.
Even the coins.
Yeah, even the coin. That, yeah. Done?
So I think one more regulator will have to also get CBDT, the taxation, that the request that we have for, you know, the rationalization of taxation for gold. It should not be any disadvantage against equity or any other asset class. So that is also one regulator that we need to address.
I can just to make a point here, and in fact yesterday when we were discussing, this point came up because this was a discussion regarding BDR and EGR, and essentially, I mean, it's a nomenclature. BDR is nothing but a digital gold, and EGR is also nothing but a digital gold. And probably, you know, you talked about whether RBI will permit or not. But so we have a GIFT IFSC, we have a regulator IFSCA. You know, and that regulator is essentially, you know, where it's a new territory carved out. So this, I would use that term of sandbox. This is actually sandbox for India. You know, whatever we are trying to do tomorrow in India, probably we are going to do today in IFSC, regulated by IFSCA. So the point which you are making is that something which we are taking some baby steps, and I had a preliminary discussion with Gaurav on that. You know, can we build on a mass non-India, you know, because our target audience would be NRIs and PIOs and all. Can we create a mass digital gold product backed by BDR? Because, so then essentially that whole audit piece of gold where it is, so that we will certify, because the gold will be with us in our vaults, it will be in the depository which is with us, and then can they create units of, you know, start with 50, 100, whatever you can get sold, can there be again then a market making on those small units, and that is something it can beautifully be made. And so they are going to various jurisdictions. In fact, what I had told Gaurav, why don't you look at IFSC as a jurisdiction, then the world is your oyster as far as the NRIs and PIOs and everybody else is concerned. And we can, talk to our regulator, then how do we build it, whether it has to be through trading member, through as a client route, or can they be a trading member, or can they be a client of a trading member and then, launch it across. We had a preliminary discussion. That is something which is at the back, and that is in our concept, in our 3-year, 5-year roadmap. It is within that 3-year roadmap. And probably whether we can do it at RBI or here level, but certainly because IFSC GM is here, and this is something which can be certainly looked at, and it is going to be very exciting. That's what I believe. And then, we are in any case working on the leasing product, gold metal loan product, but not only that, we are working on a repo product where, against BDR, dollar can be taken 1 7-day to 365 days, whatever. You choose a tenor, you choose a rate. And if as long as it matches, you get the liquidity against that BDR. So same way, whether it is BDR, EGR or a token of a BDR, certainly the same liquidity can be provided. But at this stage, it's not India, it's there, but that is a sandbox, that could be a sandbox for India, and if it can be shown that it works and it is successful in its own space, then probably something can be looked at. Thanks.
So basically, when you are looking at launching these kind of products, so what is the clientele that you're trying to target?
It's going to be NRIs and PIOs.
International.
Yeah, outside.
So it's a good trial thing we can be done there.
So I think with this, we conclude this session. Thank you very much.
Thank you. I'd like to invite Mr. Ashok Gautam, MD and CEO of IBX, to please felicitate the panelists by giving them mementos. Thank you. Group photo.
Sure. Vikramji, I'll bring your memento there.
Thank you, sir.
Actually, you can.
I was eyeing that with envy.